Hey, it's David Worrell, your DIY CFO, and I've got just a quick update today. We usually talk about the PPP, the Payroll Protection Program. And that was part of the CARES Act. So I thought today we would expand on the CARES Act a little more and talk about the Employee Retention Tax Credit. So the Employee Retention Tax Credit is pretty cool, except I want to tell you right up front, if you've got a PPP loan, you are not eligible for the Employee Retention Tax Credit. Okay, with that out of the way, here's what the Employee Retention Tax Credit, the ERTC, here's what it is. The ERTC allows you to take a tax credit. Remember, credits are different than deductions. So you get a tax credit if you've had a significant decline in your business per quarter. So quarter over quarter in 2020 versus the same quarter in 2019, if your business was down at least 50%, or if you had a forced closure because of COVID, then you probably qualify for the Employee Retention Tax Credit. And what that says is, if you keep employees around during those periods that you had a downtime, you can receive a credit of up to $5,000 per eligible employee. Now, the amount that you get to apply as a tax credit is actually 50% of their wages, up to $5,000 per employee. So you could pay someone up to $10,000 during the year and take a tax credit of $5,000. Now, the cool thing is, as I said, a credit is different than a deduction, right? So if you're in the 28 or let's call it the 30% tax bracket, which would be a pretty high earner, but not that high, then a $5,000 credit per employee could pay the tax on $15,000 or $20,000 worth of profit. And that profit might represent $100,000 or $200,000 worth of sales. So yeah, you can see that this could add up really quickly. If you've got 5 or 10 employees at $5,000 each, you might have a really large tax credit that might cover or even reverse the taxes that you owe at the end of 2020. And by the way, this is a payable tax credit, which means if the tax credit puts you into a negative tax owed situation, if you have more credit than actual tax, maybe because you even posted a loss during this year, the government will actually send you back the amount of the credit that exceeds your tax bill. So it's good news all the way around. Of course, it means you had a bad year, but turning a bad year into a good news on the tax return, I suppose that's something better than nothing. So again, that's the Employee Retention Tax Credit, part of the CARES Act. You do not qualify if you had a PPP. However, you do qualify if you had an EIDL or a disaster loan. So there's no problem taking both the EIDL and the ERTC. Okay, questions on that, please leave them in the comments, write me an email, give me a call. As always, I'm at your service. Thanks much.